it is becoming increasingly important to hire knowledgeable blockchain developers. This is to create and deploy blockchain-based solutions that match business needs. To do this, employers need to first understand the needs of their business and the kind of blockchain solution they want to build. Employers can then search online job boards, post job advertisements, and attend trade shows and conferences to find the right developer. When assessing candidates, employers should look for developers with experience in distributed ledger technologies, cryptography, and smart contract creation. Additionally, they should look for coding languages. Additionally, employers should evaluate the developer's soft skills such as teamwork, communication, and problem solving. Finally, employers should provide competitive compensation and benefits to attract and retain the best candidates. This article provides a comprehensive overview of the steps necessary for hiring a skilled blockchain developer. By understanding a company's needs and searching for developers with the necessary experience and technical skills, organizations can find the right candidate for their project. Furthermore, it is important to evaluate the developer's soft skills, such as teamwork and communication, and provide competitive compensation to attract and retain the best candidates. Following these key steps can help organizations find a qualified blockchain developer and create successful blockchain solutions. Jump Crypto and Oasis.app conducted a counter-exploit on the Wormhole protocol hacker. They recovered $225 million of the $321 million in digital assets stolen. The assets were transferred to a wallet controlled by an authorized third party, as required by a court order. This retrieval was possible due to a vulnerability in the design of the admin multi-sig access. This article details an event in which Jump Crypto, a Web3 infrastructure firm, and Oasis.app, a decentralized finance platform, executed a counter-exploit on the Wormhole protocol hacker, ultimately recovering $225 million in digital assets and transferring them to a safe wallet. It is noted that the Wormhole attack took place in February 2022 and resulted in the theft of approximately $321 million in wrapped ETH. The hacker had subsequently moved the stolen funds through various Ethereum-based decentralized applications, and via Oasis, opened up a wrapped staked ET vault and a Rocket Pool ET vault. The Oasis.app team then issued an order from the High Court of England and Wales to retrieve certain assets related to the address associated with the Wormhole exploit, which was executed by Oasis Multisig and a court-authorized third party, Jump Crypto. It is noted that the transaction history of both vaults shows that Oasis moved 120,695 WASITH and 3,213 RETH on 21st of February and placed them in wallets under Jump Crypto's control, and that the hacker also had approximately $78 million in debt in MakerDAO's DAI stablecoin, which was recovered. Lastly, it is noted that the assets were immediately transferred to a wallet controlled by an authorized third party, as required by the court order. Overall, this article provides a comprehensive overview of the counter-exploit conducted by Jump Crypto and Oasis.app in response to the Wormhole protocol hacker, ultimately resulting in the retrieval of $225 million in digital assets. Cryptocurrency prices have surged in the past year. Bitcoin, Ethereum, and other major cryptocurrencies have experienced a substantial increase in value. Traders have become increasingly confident that the Federal Reserve's ultra-loose monetary policy since the start of the COVID pandemic has helped propel the Bitcoin price. The price has reached a peak of almost $70,000 per Bitcoin in 2021. Former BitMEX chief executive and veteran trader Arthur Hayes has predicted that the Fed's response to another unpleasant situation could trigger a fresh Bitcoin and crypto bull run. He did warn, however, that the Bitcoin price could fall back under $20,000 in the short term. Meanwhile, Robert Kiyosaki has predicted a giant crash for financial markets, with a depression possible. The Fed could then be forced to print billions, which could push the Bitcoin price to $500,000. This article effectively outlines the current state of the cryptocurrency market, as well as investor sentiment. It also highlights the potential impact of the Federal Reserve's policies, as well as the potential for a correlation one moment and a giant crash in financial markets. It also outlines the potential for a major Bitcoin bull run, with the price potentially reaching $500,000 per Bitcoin. All in all, it provides a comprehensive overview of the current state of the cryptocurrency market and the potential for major price movements in the near future. Synthetix, SNX, recently gained attention due to an increase in trading volume and price. The successful deployment of Synthetix v3 on Ethereum and Optimism suggests the network is poised for further growth. Positive metrics such as DAI/DX funding rate, exchange outflow, and investor sentiment further reinforce this. However, a decline in Synthetix's supply held by top addresses could indicate bearish price action in the near future. Additionally, a decrease in its MVRV ratio could also signal bearish price action in the near future. This article provides an overview of Synthetix's SNX recent performance, with a focus on its trading volume, fees, revenue, and total value locked. It also examines the network's on-chain performance, demonstrating positive metrics in areas like DAI/DX funding rate, positive sentiments, and exchange outflow. However, despite these positive updates, it reports a slight decline in SNX's supply held by top addresses, and a decline in its MVRV ratio. Overall, this article provides a comprehensive review of the recent performance of Synthetix, offering insights into its potential future growth. Ethereum Classic, etc., saw a 20% hike in value when it rose from $20 to $25, only to be rejected and fall back to $20. The 23.6% fib level has caused a recovery snag, and if BTC fails to close above $23.35 thousand, etc., could fall to $20.75 or lower. Open interest has surged, indicating mild bullish momentum in its futures market. However, high liquidations of long positions may undermine the recovery. To make gains, bulls should track BTC's break above $23.35 thousand, while short sellers should move if BTC faces rejection at this area. This article provides an overview of the current market situation for Ethereum Classic. It discusses the recent rise from $20 to $25 and the subsequent rejection, as well as the support at $20.75 and the potential resistance at the 23.6% fib level. It also examines the open interest in the etc. futures market and the liquidation of long positions, which indicate a bearish sentiment. In conclusion, short-term bulls should watch for BTC's break above $23.35 thousand, while short sellers should watch for any rejection of BTC at the same level. Bitcoin attempted to close the week above $23,000, but failed to reach important levels flagged by analysts. Despite some optimism that $30,000 would be a magnet for Bitcoin, the outlook remained uncertain. Headwinds from the Federal Reserve and key moving averages such as the 50-week and 200-week trend lines remaining above $25,000 contributed to the uncertainty. This article covers the current state of Bitcoin. Despite a modest comeback, Bitcoin remains below important levels flagged by analysts and is facing resistance from both exchange order books and key moving averages. Popular trader Kaleo remains optimistic, predicting that $30,000 is a magnet for the cryptocurrency, while trader and analyst Mags believes the upswing for BTC will only begin once the neckline is broken. On the other hand, Mike McGlone of Bloomberg Intelligence has voiced misgivings about the bull's ability to overcome the $25,000 resistance zone, predicting that it may be a while before buy and hold types gain the upper hand. In addition, the declining 50-week MA indicates that the trend is still downward.